Hi, it's Jo and Steve from Freshagenda. And Steve, we're back for the first video of 2023.
Yeah, sorry we missed the earlier auction event, but we were still kind of
In beach mode, weren't we, really?
Yeah, I'm not sure the skin tones tell. We have actually been to the beach a bit. We've had a bit of summer weather. We've had some great summer weather here, but right now it's pouring in Melbourne.
So our not very weekly take, we're going to take a bit of a look at the New Year vibe for global markets. New Year, same vibe pretty much. Of course, the second GDT event of the year, and then the much-loved chart of the week.
Yeah, you underrate that, but it is always good. It's well selected, sharp opinions. Right, let's get going. So, anything changing? I mean, there's a decidedly bearish mood out there in the market. And it seems, what could change? Is there anything that's moving that might cause that to get a bit tighter? Because things are quite loose. So I just thought we can talk about some of these things that are moving. The US has had some fairly horrible weather.
Yeah.
First, the big storm that went across the whole of the North American continent, the top half of the continent. And then the dire flooding in California, which will have a production impact, you'd expect. And just how much of that lingers and whether there's any benefit out of that, ultimately, it doesn't look like much of the water's being captured. But it's certainly very, very wet. Another thing that we've seen lots of charts come across social media, particularly Twitter and the like, and in LinkedIn, that are showing how fertilizer prices have crashed again in Europe. And I like to contend that might be the case in terms of spot prices in some regions. But I follow a very interesting German magazine, a feed magazine, that talks about the fact that that's the spot price. The price being offered to producers that they can actually buy at is still very high, because the producers of fertilizers don't simply start to drop every product out there at spot prices and lose money on what they made last year. So there's still a lot for them to recoup in high costs of inputs during last season and last year, which yet came back. So the mail on that is that it's still prohibitive pricing.
Yeah.
However, those high milk prices do make it attractive for some. So we will see. It's not as bad as it was. I think there will be some application, but just how far that goes. The other thing is European grain prices have come off a bit, which I think is interesting because things have certainly heated up in the Ukraine conflict.
Yeah, they sure have.
To think that that's not going to cause some further disruption to port traffic or even access to grains, etc., and logistics is naive. I think it's going to stay fairly tense. Down below the line, risk for US milk growth. It's not just about margins. The weather's quite dire. So we've heard about the flooding, but that hasn't really changed the drought situation. So the margin pressure on US milk in the first half of this year will remain fairly intense, and that's probably going to slow down. And of course, in New Zealand, a land of extreme contrast right now, where the South Island is drying out, while the north is a deep blue in many regions in that soil moisture map that we follow.
Yeah, not that it means a lot for global markets, but in Australia, production's still well down on last year. We've had very wet conditions across particularly the east of the country. And so that's filtering through into fodder and grain prices and availability. So, not much growth out of here either.
Right. So a little bit on that demand side of the equation.
Yeah, the US dollar weaker. So that's interesting. I also thought it might be interesting to note that there's a lot of discussion about whether inflation's peaked in the US, and what that does to household incomes and attitudes over 2023.
Yeah. Certainly in the EU, the cheese market appears, based on spot markets, appears to be very weak. There's so much bid coming from the buy side, and that's, as we've seen in recent production numbers, pushing up the output of skim milk powder and butter to avoid cheese. couple of uncertainties on the right-hand side. China activity, well, I think we talk about that just about every time we open this up.
We do. And anything with China, like uncertainty is almost a given, isn't it? But lots of conflicting reports about activities recovering quickly. But, you know, there's still other reports of people being scared to go out and consume maybe the way they used to. So it's one to watch, isn't it?
Yeah, the stuff we track, the commuter traffic has picked up a lot, back towards October last year, which was fairly ordinary. So.
But also still milk being dumped in China, plenty of stocks to run through. So in
GDT, just as the prelude, well, the markets didn't get any better since New Year. That, you know, we've seen the milk powder markets, the skim milk powder, we've seen some healthy falls in futures profiles, forward lines. Looking fairly similar with butter. European butter has crashed, you know, lost 10% in that couple of weeks. Yeah,
the US just bounced back in recent quotes, but that's consumption there has been well down.
That funny little green arrow on that chart, we haven't seen many of those for a while, but the US spot market has actually picked up.
Yeah, talk a bit more about the US later on.
So this event, which was quite mixed, like really odd looking chart on the left-hand side. So very small changes in the powders. Fats as well, like a little more negative for AMF. But then out of the box cheddar with, you know, some very patchy gains, but overall, you know, up a couple $100. There was a fat finger result there in the first contract by the look of it again, which has been up and down. So I'm thinking it's not a fat finger issue. I think there's someone with a genuine shortness at some point. So yeah, a really mixed result. We'll come on to it, but I think, you know, whole milk powder not expected to go anywhere in particular. That's the, I guess that's the result from the Pulse event. Just
in between, so fairly consistent there, isn't it?
Yeah, yeah. So it's just starting to nudge up, perhaps. In terms of where the supply and demand, or sorry, the demand side of this event was, the demand, as you can see, across the board is weaker. Not so bad in whole milk powder. The result for skim milk powder was a surprise. I mean, we saw that being a fairly flat result. The demand this time started out better and held on. And so with that background that we looked at, to have skim milk powder go sideways, I would say is a big positive takeaway from this event.
Sure.
It should have gone down much stronger than this. Whole milk powder also a little better, hung on. That wasn't about China. That was about other regions buying. So that's, you know, that's an interesting tone. China's participation across the board, not just these two commodities, but in butter and in AMF was down.
Yes.
So they were lower across all parts, which was disappointing. I won't go through all regions, but you know, the Asian buying, Southeast Asian buying in skim milk powder lifted, and probably was the reason that came out with a flat result.
For skim,
Yeah. Whole milk powder a little bit off. Couple of our usual friends here that we pull up, but we haven't seen a lot of change in that left-hand side chart for some time. It is narrowing, that gap, as you can see at the bottom there. So the bargain of whole milk powder is starting to wear a little thin.
Yeah.
We have seen good whole milk powder buying in normal trade in recent times, particularly Southeast Asia. It's got a lot to do with this, rather than buying skim and fat. And on the right-hand side, AMF still slightly above the line when it comes to the butter equivalent or the fat equivalent value against butter. So as you can see, I've pulled out the exciting bits out of that result.
Yeah.
So not many. Chart of the week for a bit of life, Joe.
Yeah. So this week we just had an update on commercial disappearance in the US, and there's some interesting trends there. The big standout there is, you know, cheese is holding on fairly well, but butter, wow, well down. No one baking or consuming butter in the lead up to Christmas. What's going on?
So this is disappearance, which is product moving into the supply chain beyond producers. So the take that I think is generally the consensus over there. There's a lot of ordering was done earlier.
Yeah, so a bit of a time shift here.
Yeah, so it's been, you know, we've seen a slackening later in the year because of the fears of shortage and the length of some supply chains. retailers stocked up earlier,
Mm.
and so there's less to buy. And so that as the year's gone out, so that last quarter certainly, down more than 10% year on year. That's frightening. But the earlier numbers are a little bit better, as you can see during, there's not much there that's better, but that's a 3-month rolling average. But it was okay in the middle of the year, but they've fallen away.
Yeah, and a bit of response to those high prices. So
certainly, that's part of it.
Yeah, but then we've had that bounce back early in the year, so go figure.
So it's not as, I guess, it's tighter than what was expected.
Yes,
I think and there's probably a little bit of a production issue going on.
Interesting.
And to finish, we're going to talk about the Australian market.
Yeah, a little bit of spruiking at the end of this one, Steve.
Yeah. So we've written a little paper, a discussion paper about the big milk implosion, which has got the cover pic there on the left-hand side.
Yeah, I like how you've tilted it so the chart of milk production looks almost flat, but it's actually down.
That's right. This is a paper that is hanging off our website. It's a discussion paper. It's only 3 or 4 pages long, meant to talk about the issues. There are plenty of issues, no answers to a lot of these, because it really depends what happens. Will milk start to steady? There will be a significant impact on the product mix when we've moved from, over a number of years. You can see the falls in milk there since 2018 is bad enough. We've lost 1 billion litres since 2018. And that has a profound impact on what the industry produces.
Yes.
During that time, fluid production or fresh milk production has remained fairly steady. Cheese output has remained, has essentially gone sideways as well, but that is the big consumer.
Yes.
40% of milk.
In Australia.
Leaving far less for commodities. As the bottom chart shows there as well, who's buying the milk is also shifting quickly. That's a 7-year period between those different seasons there, but it has been a gradual shift away from the big players to more niche processors and some of the intermediaries.
Yeah, that's the interesting thing in Australia. We've got less milk, but more people fighting over it, which is a reason why milk prices are high, and they're remaining reasonably high in Australia. But I guess this is looking out to the future and what it all means for the
and we've long tracked a commodity milk value, which is based on typically New Zealand export commodities. That's less relevant now. You can see the departure there, particularly in cheese, which is only one factor in it. But there is now more a direct Australian import parity, which is driving the value of milk, and that will be the value driver as we head later in the year for another one of those big turkey shoots where everyone competes for milk.
Yeah, in June. Yeah.
So we're getting ahead of that, I think, is the main thing here. But that's we are launching at the moment a new product for the Australian market because of the doubling down on local factors rather than world market influence. That's available this week. So details are on our site. All right. Okay, that's all we have.
Yep.
Thank you for watching. We'll be back
next time,
probably in a couple of weeks.
Yeah.